Good evening, trading world. It is 10 p.m. or almost 11 p.m. here on the East Coast. Just giving a bedtime update. Wanted to take a sneak peek at the markets before I went off to dreamland. Excuse me, myself. Just to see what the premise of what I was thinking, whether it's heading in the right direction or not. Um, And before I get into what I was thinking at the close, I'll go back over what happened today. For quite some time, I've been calling or talking about how a lot of the big moves on these trend days, whether it's a trend day up or trend day down, a majority of that move will happen in the overnight session. So I've been trying to plan ways to kind of capitalize on that move option wise in the overnight session. Um, and it's kind of, well, I wanted to do this without putting myself into too much risk because we see what just happened with this 80-point gap down. Um, if you have had a long position on and looking for the market to rise, and you come in at an 80 point gap down, and you wasn't prepared for that loss, that probably could have wiped your whole account out if you wasn't risk averse or ready risk wise for something like that. So since I've been seeing this trend with the bigger portion of the trend day happening in the overnight session, um, I was looking for ways to kind of take advantage of that, and I'll get into that a little later. But as we came in, I guess you can kind of see the 80-point drop. I'm not going to go too much into detail, but we started off here in the morning, and the first thing that I said is do not chase. Um, I outline levels here of support. These three levels being the main support number three, support number two, and the king support. And then on this end, we have basically resistance, all the way up to the king resistance. So here was a great place, entered for futures trade down, and that was pretty much it for the day for me. Um, but I was steady looking for somewhere to get in options wise for my Robinhood account. Um, so the whole day came and went without me entering in the position until about just before closing. And I set that position up just to kind of take advantage of what may or may not happen in the overnight session. And because we held that king support and we had this massive downtrend 80-point gap down, um, I'm looking, or I had started looking and thinking about what they call a dead cat bounce. And as you can see here, this little rise, for the amount of movement we have, this is not considered a bounce to me. Um, Definitely not a dead cat bounce. Um, we don't even have a dead cat yet. We might have a cat that's walking around with the coronavirus, but he's not dead yet. So, what I'm looking for on a bounce is going to be up past this supreme resistance level, and I will probably update that level in the morning. Um, so the two positions that I thought about taking, I was looking at possibly if I thought that the market was going to continue down, I was looking at doing a debit put spread on the SPY. And just for some added insurance, just in case I was wrong in the direction, as far as uh, not quite ready to go down tonight, I was going to add a out of the money call on top of that uh, put debit spread in the SPY. So that way, if we did get that bounce, it would kind of make up for what that uh, put spread may lose, especially in theta. Um, but the way the market kind of behaved and held certain important levels to me, I decided that the bigger um, the bigger side of my thesis was going to be to the upside for tomorrow. Um, Looking for that dead cat bounce. So, what I decided to do in an inexpensive way was to use the XLF and to use, I don't quite know what, what to call it, but I'm going to call it a kind of off kilter straddle. So we have the XLF here, and what I decided to do, I bought both a call and put, and by doing so, um, to protect my downside, I bought a out of the money put on the XLF um, for 12 cents, 12 or 13 cents, and it's the February 28th 29 strike put, and then I decided to buy an at the money call so that the call would be the most sensitive, so that way if we decided to take off, because I do see us getting probably a bounce somewhere up here to 30.24, possibly 30.3, or um, maybe to this 30.6 area. So that would give that call legs to grow and be profitable. And if we decided to drop, the downside is much more extensive than the upside. So that's why I decided to put that put out of, well, uh, deeper in the money, so that because the downside is more extensive, we could pretty much have a further drop, so that with the time or theta that's left on the put, we would have time to gain profitability. Um, so the XLF put call strategy is what I went with. I did that in the Robinhood account just to kind of keep gaining comfortability in Robinhood. Um, just to kind of give a quick update on levels and what I'm seeing, because I like doing my pre-market in the morning so that way it's geared toward that day and not, what happens in the overnight session. But one of the things that I saw a very, very important level to me is that 3212, which is noted by my king support. And since we didn't break that 3212, and we made uh, by the slightest of margins a higher low, I decided to go with the upside that we could get that bounce. But so far, going in tomorrow, the things that I'm going to be looking for is just 3212 holding, and then 30 3200 even. If we hold that round number 3200 even, there's still a chance for the bounce if we're not already gapped up maybe 10, 20 points, with 20 points by the morning. Um, but on the off chance we do break 3212 and 3200 even, we're just getting the party started. The 200 moving day average is all the way. Let me see where it is. The 200-day moving average is all the way down at 3,046. So we have a long way to go. But if we start breaking levels like that, my guess is that's where we're headed. On the upside, this bounce could possibly take us to 3311, 3300, 3311. If we get up here, this is a point at which I would start looking to short. But believe you me, every rally that we have right now, I believe is fake. It's just ammunition to short. I do not believe that it is time to get long. So just remember that when we rally up here and people are buying into it, it could happen, but just so far as what I'm seeing now, any rally would just be the basis of short covering because of how far we fell, how fast we fell. So be on the lookout for that. Make sure you have your risk tolerance cut off to points where you can accept, because this ride has just started. So I wouldn't be surprised if in the near future we have another drop, 3-5% down day, because one of the things that I'm going to be looking at here over the next coming weeks is trying to tell the difference between a correction and whether we're going into a bear market. Corrections happen all the time. Moves that will take you down 3 to 5%. That's a correction. But when we string these moves out pretty close together and they equal up to 20% down, that is in fact going into a bear market. So that's one of the things that I'll be kind of keeping my eye on for the days to come. And I'm guessing that concludes my bedtime update for the market. I will update the levels in the morning. I will try to get up and do a video for those updated levels. So until then, keep your risks at acceptable levels and buckle up because this ride has just begun. Good night, trading world.